All right, so we're going to take them one after the other. We are going to start with going long or short. All right. Now, when we are talking about an asset going long or short, for example, let me pull this here. I did analysis on gold, which I was expecting it to get to this level or a little bit below this particular point here, and then go up. Okay, let me do annotation. Now, this is gold symbolic XAU USD, right? So that is gold versus US dollar, or gold trading against US dollar, or how much US dollar do you need to purchase one gold? That is all that we are talking about when we say XAU USD. Now, just a clarification, the spelling of gold starts with what? G. Silver is X. Silver is S. But when we come to the pair market, is XAU goes for gold, and then XAG goes for silver. So don't interchange the two. When we get to the trading platform, we are going to understand all those things practically as well. All right. Now, as I analyze this asset, my aim is for it to get to this level, which also have an interesting point here to consider, right? But it means that as I was expecting market to get to this area, at that time, price was somewhere here. Let me change it. Price was somewhere here. So what I will do at that point, if I'm taking that trade, then I will go for a short. Or other people will say a sell. And other people will say I am going bearish. Okay, I'm going bearish. Now, what it only means is that market is at a certain level and you're expecting it to drop. That is what it means. So at that particular point, when you buy and it's going down, you are going to be in negative. When you sell and it is going down, you're going to be in positive, right? That also give an advantage to traders, to investors. On investing basis, in most cases, it's a buy low, then it should sell high, right? But as a trader, you can buy low and then sell high so that you make money from the both side. So literally, that is about short or bear or sell. Now, the opposite of sell is buy. The opposite of sell is buy or bull. So for instance, as price got to this area and I have the indicating factors to go in for a buy, because based on my analysis, market will be going up here, right? So if it is going up, what I should do is that I will go long, or I will go bull, or I will bull, or I will buy. That is what it means. So in this case, if I happen to sell gold here, then by now I'm in negative because I want it to go down. Instead, it's going up, so I'm in negative. But if I buy gold here and it's going up, it means I'm making profit. Okay, so literally that is what it means. Now let's go a little bit technical. Now we are looking at XAU and USD. Now we already know that this is a base currency and this is a quote currency. So what it only means is that how much of the quote currency do you need to buy the base currency? How much of the quote currency do you need to buy the base currency? So when the base currency is stronger to the quote currency, we expect market to buy. When the quote currency is stronger than the base currency, we expect it to sell. Okay, and vice versa. So if, let's say, we quote it as USD XAU, it means that this up would have been down. Okay, this up would have been down, and this down would have been up. Now, this down means that US dollar is performing better than the gold. All right, this up only means that gold is performing better than US dollar, or gold is stronger than US dollar at that particular period of time. Now, in trading, the market cannot stand still. The market only becomes standstill if it's neither going up nor going down. Okay? If market is neither going up or going down, it is called consolidation or ranging. All right, it is called consolidating or ranging. The market is not either going up or it's not going down. All right, now when we go into a little bit of technical and we are climbing, we'll actually see what is trend, which we have an uptrend, and then we have a downtrend. Okay, so we're going to look at all those things step by step and one after other. Now, that is everything you should know about going long and going short. Now, the ability to understand the market is just for you to know when it will go up and when it will go down. So the struggle, like people will tell you, is difficult to analyze the market. The whole thing is just the ability to what? Identify the direction of the market, right? I don't know, maybe some of you might see this Bitcoin analysis, and then it's all about it creating a reason of dropping. The last update was this area, which it pushed back. Then the last update is when it dropped up to this level. Now, when you spot all these indicators down, which is very easy, you will get to understand. It means that you are going to sell BTC at 30,000, somewhere 30,000, 445, 455, or somewhere around 30,000 and 98, or somewhere around a little bit 29,000, or somewhere around a little bit 28,000. Now, this somewhere around I'm mentioning also has a name and a term, and there are ways to get that thing done. All right, there are ways to get that thing done. So basically, I analyze this myself, okay, and I project the market towards it. Now, anytime market bought like this, the biggest problem of traders and every human being is that they want to see an evidence that it is good once they jump in. Maybe the time you get your evidence that is good, that is the time that things will go down. So the problem people face here was that as BTC was struggling at, let me go down, somewhere my zone 1800, as BTC was somewhere 1800, finding its way to go up, which some of us expected, others are waiting. It got to 20,000. I wish I was going to buy. It got to 24,000. Hey, I wish I was going to buy. It got to 26,000. Hey, I wish I was going to buy. Then at 28,000, it jumped to 30. Then they'll be like, it's going to buy. Emotion. Then they jump into a buy at 30. Then price will come a little bit to 31. Then they will be happy. Some of them will enter another buy at 31,000. Then it's sold nicely with a proper validated confluence and confirmation, which we will look at. This particular thing is called head and shoulder pattern. It respected it nicely, respected the allocated portions or areas we mark, and sold in a very nice way. Now, if you actually identify that market will sell here and you sold BTC here, you're actually going to make a lot of money. Now, this is the difference between you, the trader, and an investor or a holder. At this particular point, you are not buying BTC and holding and converting it back from BTC to USDT or stuff. You are only going to the forex market. You are choosing what we call lot size. You are setting a stop loss without having anything to do with Bitcoin. You sold on Bitcoin against the US dollar. It means that you are expecting Bitcoin to US dollar to be stronger than Bitcoin. That is why you are selling. Another interesting problem for people is that as it got here, another people like, oh, okay, it is going to sell. It didn't sell here. They will say they will now try to sell here. So there are people that psychologically they treat the market wrongly because they want to see an evidence. And you must not see the evidence before you make a decision. Make the decision, and decision gives you the evidence, right? Let me there are a few setup we analyzed previously. Let me just annotate them and then let's look at them. I think we have Aussie US dollar, odd USD, on you. Right. So for instance, this is a OM favorite asset in the previous class. So we drew this top analysis that end here. That is towards our class. All right. I didn't update it. Everything was like this. But we have a line, a diagonal line that tells us that market is actually creating what we call higher highs. Higher highs. Now, we are still talking about long and short, all right? But just hear that there is something called higher high and lower lows, okay? Now, this is the point. When the market is going up, where are you? Great. When the market is going up, this is a high. It will create a high higher than the previous high. We will break it down. Just note it down. Now, when it's going to pull down, it may not pull below the previous high or the previous low. This is the low, and this is the high, where it is coming from, and came down here. Now, if the market pull back up to this area or a little bit somewhere here, and it creates a returning point, it creates a returning point higher than this previous high, is an evidence that market is going to keep going up at least a little while. So you now see something like this. It will now create a high higher than that high again. And when it is going to come down again, it will not come below any of these lows. And then you may see it going up again. The opposite also gives you a sell structure. Now, that is the same thing that was spotted here, a little bit below. Okay, so this is low. We consider this whole area as one level, and then we now have a high created here. All right, so literally, if this particular confirmation work, then this asset could buy a little bit into that area. Right now, here's how simple technical analysis is. All right, so make your mind that is simple, and then We'll make it very simple. Now, let me show you another asset if I remember well. I think it's GBP CHF. We analyze this one too, and the chart remains like that. Am I correct? Probably yes. Great. So let me go to a 4-hour time frame. Don't worry. All these are normal things that I'm coming to teach you, right? So this particular market, we analyze it, and then we have a layer, a high and a low. So at this particular time, market is neither going above the pink line, or this particular yellow line, right? So on a 4-hour time frame, which we are going to break it down, on a 4-hour time frame, we'll see that this market is actually ranging, or is consolidating. It's neither breaking above or breaking below. What it means is that those who are actually trading on a smaller time frame or 1 hour, there's a lot of ways that they can make some good money for themselves. All right. So at this particular point, those who are seeing the chart on one day might not make any good decision, but could make a decision. But those who looking at the chart on weekly time frame, they might also make little or no confirmation or decision, right? Now, this will now lead us to the next topic for the types of traders. Now, we have four major types of traders. One is the scalpers, one is day traders, number two and number three is swing traders, and number four is investors, right? Now, a scalper will play with somewhere around 1 minute, 5 minutes, and 15-minute time frame, right? They make their decision on the lower time frame. They make the decision on the lower time frame. And their target is actually, once they make some good profit, they close the trade and look for another opportunity. That is what scalpers does. Now, what day traders do is that they also analyze the market probably on daily time frame or weekly time frame to get the outlook of the market. After they get the outlook of the market, they now make decision on either a 15-minute time frame or 1 hour time frame or 4-hour time frame based on their confirmation style, based on their confirmation structure, based on the confluence they want to use to validate their setup in the market, right? Though, but they don't hold a trade above for the day to close. So if the market open and they enter the trade, they try to get their profits within the space of the day. Now, swing traders are the other way around. They are more or less like semi-investors, and they approach the market on the general outlook on probably monthly time frame confirmation. Monthly time frame confirmation. So when they get the trend on the monthly time frame confirmation, they come to weekly time frame to get the nature and the reaction point of the market. Then they will come to the daily time frame and get their entry point or 4-hour time frame. Now, those people, let me see which asset I can use, for example. Yeah, I'll still use GBPCHF, but I will use 15 minutes 4-hour time frame. So those people, they still fall here. So they can hold this trade. Probably they will analyze the market. You'll get a nice entry here, 23rd April. This 23rd. This is 3rd April, sorry. They will get into the market 3rd April, and they could be holding the trade till this today. That means they're holding the trade for over how many weeks? 3 weeks now, right? They are called swing traders, right? Now, the last but not the least are the investors. They do the analysis on yearly time frame or 3-month or 6-month time frame, and then they go in for a very long time. They go in for a very long time. Now, there are so many things that will influence your decision, be the type of trader you want to be. One, equity. Investors should have a large sum of money because there's something we call pullback, where trade, maybe you enter the trade and the trade can go into some good negative before finally going your way. Now, when you are looking at the trade on the bigger time frame, some pullbacks can swallow a smaller equities money. Now, swing traders does not necessarily need to have large sum of money, but it based on the style and the approach you want to use. Some of them will use trailing stop loss. Some of them will get a good entry and then allow the trade to flow. Okay, so pullbacks might not really affect them. Then some of them also use what we call trailing stop loss to protect their profits at each particular point based on levels market to be reacting to. We're going to learn levels, all these things. So you can actually be writing this on the left-hand side of your notes, all right? So you can also start researching on them. So learning and teaching becomes sweet for all of us. Now, day traders, they will still be within this area, but we'll be looking at their entry somewhere on 1 hour time frame or 15-minute time frame. Some go with 30-minute time frame. Personally, I'm kind of cool with 15-minute time frame, right? So for instance, they got the outlook that, oh, this is a downtrend or market is trending down, all right? So somewhere 19th, they will get a confirmation setup and they could hold that trade just up to 20th or maybe a little bit down, a little bit down here. Then they will close their trade. They'll put their take profit actually on this area. Then the next day, they will look for another entry based on this area and probably hold it to this area again, take their profit, and then they'll come again, probably hold it to this area and take their profit. But they know it's a downtrend. Now, for we the scalpers, we may look at 5-minute time frame like this and just make quick decision. Once market give you some good profit, you are out. So scalpers stay long with their computers. They consume a lot of time, but they somehow, somewhere make more money as well. Swing traders is day traders is somehow intermediate. They don't take a lot of time. They spend a little time in analysis and they make the decision. Then swing traders the same, day traders the same. Then the people who don't give time, like their time is free, most of them is the investor because they'll do the analysis and they hold the trade for a very long time and they don't make enough money. Why? Because there are sometimes, let's say, market will go in your favor 1,000 pips, pull back to negative 500 pips before it goes up and give you, let's say, 1,200 pips, come back. But scalpers will be taking each advantage on all those pullbacks. So when it comes to cumulative profits, scalpers and day traders will make more than swing traders and investors. Now, it's all based on the kind of time you have, the equity you have, and how you want to what approach the market, right? So you can do a layer of research around it and be able to know what type of trader you will want to be when you start the journey. For me personally, I'm a scalper, a day trader. I am now learning to be a swing trader, right? In fact, holding trade for a long term is also another gift on its own. I experienced it with a friend, not a physical friend, internet friend, and he held a trade for 3 months or 4 months or so. He analyzed the market, held a trade from multiple positions from about $10,000 to $15,000 or so, and grew it to $10 million. He hold the trade. That means he forecast the market, and then he has the equity. He took the risk. He held the trade. He hit that target. He resigned from trading immediately, right? But this journey took him not a year or two or three. It took time to study the market, forecast the market, get an equity. Yes, the trade go with stop loss, right? He never trailed his stop loss. Profit, the trade only hit his take profit. One asset, multiple entry, right? I'm not saying do that, but I just want you to see the possibility in the market when you understand what you want to do and then how you want to go and the right mentorship and the right tutor the same thing, right? So those are the four types of traders we have, and based on your flexibility, your work environment, your ethics, you should be able to know which one fits you. Now, we are all having different jobs here. Some of us are fully free, so we can do scalping. Some of you are probably 9 to 5, you are now trying to switch. Yeah, you can be a day trader. You come back in the evening, you use 2 hours to do your analysis. You are going to work, you set pending order. We are going to look at type of orders in the next session. You set pending orders down, you pick the trade, you put your stop loss, you take profit, you go to work, you come back home, you see where the trade is. If it is suitable, you can hold it, or you trade your stop loss, or you close it, either in profit or negative. You analyze again. Now, there are some of you too. Maybe your work can take you 4 days before you come home, right? Or you get to work and you have the whole week before you come home once. So you can do your analysis during the weekend and take the trade for the week. If the trade did not get to your level, you put a pending order, a sell limit, uh, a buy limit, a sell stop or a buy stop. Put your parameters down. Once you put it down, off your machine, go to work. Once the trade get there, the broker takes the trade for you, and when it goes in your favor, he hits your take profit, he close the trade for you, you come home, you see your profit. Then investor, that one, yeah, maybe you have some good equity with proper risk management, you can actually get there. All right, so let me go to secrets to consistent profit, positive expectancy in trading, right? Now, with the positive and the secret, interestingly, all these other three topics, implementing a trading plan and principle of consistent profit trading and how to be successful trader, they are all built into one, right? Now, I love to use the chart as always to get my evidences to whatever practical it should be, no matter what. All right, so I'm going back to BTC US dollar. Going back to BTC. Let me show you a few stuff. I'm going to a daily time frame. Great. All right, so interestingly, as a trader, you want to make profit, but you need to learn how to accept losses. You want to make profit, you need to what? Learn how to accept losses as right. Now, in most cases, the ability to understand what market is doing and play along with the market is what will define you as a good trader. It's what will define you as a successful trader. All right. Getting confluences to your trade setup is very important. Getting confluences to your trade setup. For example, now let me break time frame a little bit down. Now, these are candlesticks which we were looking at. Each candlestick is printed every day, one day a candlestick. So today is Monday. This is Monday's candlestick. Yesterday was Sunday. This Sunday's candlestick, because in the crypto market it's 24/7, but in the forex market it's not 24/7. All right. So the the calculations and the candles formations are definitely different from the forex market. Now, when you take this will be Friday, Saturday, this will be Friday, in that order. All right. Now, anybody that look at Bitcoin USD on daily time frame structure should know, will be able to know after 14th April candle, then 15th April candle, then 16th April candle, that market will sell. Anybody that look at that daily time frame candle will be able to know that Bitcoin will sell. Now, currently, those who understand trend of, this is not a financial advice, please. Those who understand formation of market structure will also understand that as market came to this level, it just do a correction that validate this whole area being a support to a reacting point of resistance. So the probability of we seeing BTC USD at 26,528, which is this blue line, is equally high. That is number one. Number two is the ability to see it reacting in this area. What I just put now is equally high because they are elemental point here. We are going to break all these things down, right? But why I'm actually doing this for you is that when you want to approach the market, don't approach it on what people are saying. Don't approach it on speculations. Don't approach it on assumption. Approach it getting evidence to effect of price. Evidence to effect of price. So that will also make your trading journey be what? Secret to make your profit, right? You must always have confluence. We are going to break it down. I just look at my time, and I think I have to stop here for question and answer. If not, we may end up going extra longer. All right. So on Wednesday, we are going to look at secret to consistent profit into detail, positive expectancy in trading, implementing a trading plan, principle of consistent profit in trading, how to become a successful trader.